Hello and welcome to the Wealthy Trades Daily Market Forecast for March 25th, 2015. I want to take some time to welcome those that are potentially listening on the iTunes store at the new Wealthy Trades podcast. Or you can listen on YouTube. Okay, so YouTube channel, you type in Wealthy Trades, you can listen there and watch the videos. The best place, obviously, to watch these videos and listen to the daily forecast is on wealthytrades.com itself, because in the resource tab or in our media feed, you get live information, or as live as you can get. It's actionable. We post these before the market opens. Anywhere else, whether it be YouTube or podcast, our post midday or later in the day. So the information I'm talking about is not actionable. It's not something that you'd want to take action on. It's good information. It's something you're going to learn from, but it's not actionable. Again, the best place to listen and to consume the information is on the wealthytrades.com website, in the resource tab, in the videos, in the media feed. It is there's a lot of phenomenal information in that. And in fact, I do want to take some time to highlight some of the places that I really want people to focus on. When you go to the wealthytrades.com website, please take the time to watch some of the videos under the resource tab. Watch the videos on the ultimate stock picking tool, 1 minute overview, dashboard dive. Obviously, the podcasts are there. Those are the daily updates, much like I'm doing right now. And then the premium videos, very, very important and good information on here on how to utilize the levels to win information, the data, how to some strategies on how to trade these with the four market environments, some advanced techniques. Great resources within there, and I really want people to take advantage of that so you can understand how to best utilize the information that we're getting. Okay, so like days like yesterday, yesterday we rolled into the day and the market was up, and the trend quality of the market was decent, and so we decided to go long. And the sector we wanted to focus on was the healthcare sector. It was doing decent, midday, and then all of a sudden the market starts to roll over, and that's what we set up today, and that's exactly the reason why. The trend quality is below 50%. So if you know the Wealthy Trades core strategy is we focus on the directional bias, and then we want to structure a trade from there, or structure a different viewpoints from that. And if the trend quality is below 50%, we can't be that confident in trading in the direction of that trend, right? Because it's not the greatest trend. So what do we do? Well, we want to focus on pairs trades, and that's what we're going to do today. And I'll recap kind of what we're doing for the week and the month also, because we probably have some new listeners. But let's go. Let's get started. Because the market's up, we do always want to focus on the best sector in the direction of the trend, but with the trend quality on a daily basis. All right, so this is more short-term trading. Because the trend quality is below 50%, it's 46.8%. And let me go into what that trend quality means, all right? So what that trend quality means is it kind of takes an aggregate of the percentage of the stocks that are in the trend. So out of the 502 stocks that we're analyzing right now, 81.9% of them are moving in the direction of the trend. So we do that for you. We do kind of a scorecard process every day, week, month. And I'll show you this on a weekly basis too. On a weekly basis, you can see 72.5 are moving in the direction of the trend, and on a monthly basis, 75.1. So we are in an aggressive uptrend. But we take that further and we do what's called a quality gauge, and we do that based on how many of stocks in the direction of the trend. So if there's 81.9% of the stocks in the S&P 500 in an uptrend, well, how many of those stocks in that trend are hitting their trend side levels to win? Okay, so for example, XLP, the consumer staples sector, has a trend side today of 49.02. Well, it'll be positive for that quality score if the XLP hits 49.02. That's a good thing. All right, so we analyze that, and then we also analyze today. All right, today being Wednesday, we analyze what the hit rate is on the upcoming day, week, or month. So this quality filter is extremely in depth and extremely important. But what we're going to do today is we're going to focus on a pairs trade, okay? Because the quality isn't great. The market's been just chopping around, and it's sitting at a key level right now. The S&P. Let's talk specifically about the SPY. I said this a couple of weeks ago. I said this 207 to about 211 area is going to be very key for the market, and it has been. Okay, and I think whichever way we break, and I've got a bullish bias, I actually think we're going to break higher. um, at least put another leg higher, maybe 5-10% higher, overall. But whichever way we break, whether 207 or lower or 211 or higher, I think we're going to break, and that's going to probably be the next 4, 5, 6% move. That's going to target it. But what we got to do is we got to figure out what we do in the meantime, right? Do we want to just sit on our hands? No, we want to be active, but we got to be smart active. Okay, so let's start going into the best sector. The best sector today is the XLP. 76.9% of the stocks in the XLP are moving in the direction of the trend. The quality of the XLP, how many stocks hit their upside, and in combination of the hit rates today is good. It is the best sector. So I'm going to move the stocks within the XLP into my portfolio, and I do that by hitting this little plus sign here. Those stocks, for those that are listening on podcast, are PEP, KR, CAG, CLX, PG, CVS, MNST, and DPS. Okay, so those are all stocks within the consumer staples sector. I'm going to take it further. I'm going to go in here and we're going to find the best stock within the consumer staples sector. And this is very powerful information. And you can only get this information at wealthytrades.com. This is the only place you can get it. But what we want to know is we want to see one of the first filtering techniques I use is seeing the levels to win profit. This is the first place after I put the stocks in my portfolio. I click on the portfolio tab, and I want to make sure each stock, my first filtering technique, I'll eliminate the stock if it doesn't have a levels to win profit on both sides. What this represents is it represents MNST, for example. When MNST, it's in an uptrend in the best sector, when it hits 140.29 historically, that's the upside, expected upside today, it hits that 50% of the time. But more importantly, when it hits that, it has a tendency, this historically tells me that it has a tendency to continue to rally and make money. On the counter trend side, when it hits this 137.11, that's the expected downside today, it has a tendency to bounce off that and rally and close higher. That is what I want. These levels to win profits indicate a profit in the direction of the trend. So when it hits this level, 137.11, historically, what happens? Well, it usually bounces off and closes higher because it makes money. What happens when it hits 140.29? Well, it usually continues to rally because it makes money. We also know that this shows you the power of the trend. All right, MNST, if we knew nothing else other than the hit rate, we know that MNST is in an uptrend, and historically, it should move up to 140.29 or down to 137.11, but it has a 50% probability historically of hitting this level and only a 26.9% probability of hitting this level. By the way, if you do the math, it closed at 138.70. These levels are exactly the same distance away from the closing price. So if you think about that, if you think about kind of probabilities, there should be a 50-50 probability, right? No, there's not, and the reason why is because this shows the importance of the trend. 138.70 is the same distance to 137.11 as it is to 140.29. But it has a 50% chance of hitting this level and only 26.9% of the chance of hitting this level because it's in an uptrend. That right there shows you the power of the trend. You got to trade with the trend. So anyway, MNST meets my first requirements. I'm going to keep that one. PG, here's one that doesn't. All right, it loses money. So I'm going to get rid of PG. I'm going to keep PEP, KR. I'm going to keep DPS, keep CVS, keep CLX, keep CAG, keep, and XLP, keep. All right, so we didn't really pare it down much, but now we're going to take it further. We're going to pare it down from there, and what I want to see is I want to see that the hit rate, all right, and the close rate. So it closes above this trend level 26.9% of the time. It hits it 40.4% of the time. So I want to see this number here, this levels on levels trend side level, more than 50% of the HPP. So in this case, it would have to be more than 20.2, right? Well, it's 26.9, so that's good. And then I want to see the counter trend side. It hits it 38.5% of the time. I want to see this levels on levels percentage less than half. So this would have to be, right around 17 or 18 or so, or less than 18 or 19, and it's 13.5. So this one meets my requirements. Great. All right, CAG. Again, less than 50, more than 50. Good to go there. Less than 50, more than 50. Good to go there. Less than 50, more than 50. Less, more, These all look good. Less more. Less more. And less more. Okay. So they all look good. So how do we figure out which ones we should trade in? Well, the easiest, if they all meet the requirements, right? The easiest way to filter this down is all 8 of these make money. They're all trending. They all hit their upside more than they hit their downside. And they all meet the requirements. So how do we filter this to the best one? Well, this is how I do it. First of all, these are all decent stocks to go long in today. We're not just going to blindly go long because the quality's not that good. We're going to pair it with a short position too. Here's how I do it though. If I have a bunch of stocks, 8 stocks that are all good, then I choose the one that has the highest HPP, the highest hit rate on the trend side. And PEP is the stock that has the highest hit rate. All these other ones have 40, 53, 53, 59. Well, PEP has a 67.3% probability of hitting its trend side. That one is the clear-cut winner. So that is going to be the play long today is PEP, which is in the consumer staples sector. All right, so let me look at the chart real quick on this just to see technically what it looks like. Again, it was a clear-cut winner. It's kind of putting in a little bit of a rounding bottom here. I do like it. You remember me talking about that kind of trend shift. I do like that it shifted into an uptrend right here. You can tell by when it goes from purple bars to green bars to purple bars. It shifted into an uptrend here. It's kind of retraced back down a little bit back to that shift level, and hopefully we can see a nice bounce today. So we are going long PEP today. Whoops. Sorry, I was looking at the... There we go. Yes, long PEP today. Just see, I think I was on the wrong chart, but okay, yep, still looks good. In fact, this one even looks better. Like I said, shifted into an uptrend, kind of sold off back down to that shift area, and hopefully that's going to be a bounce area. That's good. Long PEP, the plan is I'm going to go long at the open. I'm also going to add to the position at 95.18 because it makes money. Historically, it closes above that level. And I'm going to add to the position if it hits 96.54 because historically it makes money there. But remember, the quality of today isn't that good, so we've got to pair this with a short position. And the way we pair it with the short position is we find the sector that's trading in a downtrend. And there's only one sector that's trading in an aggregate downtrend, and that's the material sector. So what I'm going to do is I'm going to bring the material sector over to my portfolio by hitting the plus sign, and I'm going to bring the 8 stocks within the 8 best stocks within the material sector over into my portfolio. I'm going to find the best stock to pair this with. So I'm going to go long. We know we're going to go long PEP, and we want to pair that with a short position. All right, so I'm going to use my filtering tool, and I'm going to eliminate anything that doesn't make money. After I clicked on my portfolio, eliminate anything that doesn't make money on the trend side or in the counter trend side, right? And the levels to win profit. So the XLB itself doesn't make money, so I'm going to eliminate that one. AA doesn't make money on the counter trend side. Eliminate that one. DD, eliminate that one. EMN, all right, EMN does make money. That's good. FMC does make money. That's good. IFF doesn't. Let's eliminate that. MON doesn't. MOS does. And MWV doesn't. Okay, so now we've got it paired down to 3 opportunities. So now we're going to do the same thing. We're going to make sure it's got to be greater than 50, less than 50. That's good. Greater than 50, less than 50. And if you notice, so I want you to notice something. PEP, look at the trend side. It closed at 95.86. The trend side's 96.54 because it's moving up, so the trend side's higher. Whereas Moss closed at 46.92. The trend side's 46.38. Why? Well, because the counter trend side, or because the trend side is the trend is moving down. All right, so that's the reason why. So, but now let's figure out which one we're gonna go into. So, Moss, I'm gonna eliminate Moss because look at this. It hits the trend side 61.5% of the time, but only closes above that 25% of the time. So it's less than 50% of the time that it hits it, it closes above it. So yeah, it hits it at a high rate, but it doesn't close above it all that often. Okay, so I am going to eliminate Moss, and now it's down to FMC, which is more than 50 and less than 50. So more than 50 on the trend side and less than 50 on the counter trend side. That's good. And EMN is more than 50 and less than 50. I'm going to eliminate EMN because here's the deal. The hit rate on FMC, the historical hit rate on the trend side on FMC is 55.8%, where EMN it's only 50%. The other thing that I can tell why FMC is better is because levels on levels. How often does it close below its trend side, which is what I want because it's in a downtrend? EMN closes below that level 26.9% of the time, whereas FMC closes below that 32.7. Therefore, FMC is a better stock to short today on a Wednesday than EMN is, and that's what we're going to do. Now let's look at FMC chart here real quick. Yeah, it's been pretty volatile. So here's the deal. Here's what we're going to do. We are going to short at the open FMC. If it gets down to 58.54, I'm going to add to the position there because it makes money and historically it closes below that level. If it rallies up and hits 59.50, I'm going to add to the position there because historically it sells off from there. So short FMC and pair that with a long in PEP, and again go long PEP at the open, short FMC on PEP. You can add at 96.54. You can also add at 95.18 if it gets down there. So that is the pairs trade for today, March 25th, 2015. That is the trade. The reason why we're doing a pairs trade is because the quality gauge is not that good on a weekly basis. The stock that we are long, if you remember what we did, is the XLU is the best sector to go into, to focus on. But using our pair down method, we didn't find anything that met all of our requirements. So if you remember, what we did is we went into the next best sector, which is the healthcare sector. All right, and we found the best stock in the healthcare sector. And the best stock that we found for the weekly basis is MNK. Okay, so we are long MNK right now. And MNK has an expected upside of 135.86, which I'm going to add to if it gets up to there. Has an expected downside of 129.08, and I'm going to add to that if it gets down there. In fact, it almost got down there yesterday, not quite though. But anyway, MNK is the one we're long. And then on a monthly basis, we're also long, just straight up long the XLV, the healthcare sector, because it is the best performing sector. The performance on the healthcare sector on a monthly basis is phenomenal. And this thing's up almost 3% this month in comparison to the market that's about flat. So doing really well there. So I thank you for listening. Make it a great day, and make sure you podcast us. Make sure you watch us on YouTube. Most importantly, go to thewealthytrades.com dashboard. Check out the resource tab. Email us if you have any questions, info@wealthytrades.com, and make it a profitable day.